Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He's speaking to us from South Florida. Welcome back to the show, Rick.
Thanks, Jim. Always a pleasure to get together with you.
Rick, you were talking about a Wall Street Journal article off-air about volatility is the story on the markets right now. What's your take on that?
Well, you know, the news media, they're always reaching for some story to shouting for attention. And the latest story is that millennials are trading like crazy. And Robinhood is really where the action is. And it beggars belief to think that they're out there buying shares of Amazon at $2,600 a pop, sort of things that really lift the market. So the story's kind of a fraud, but the main piece of it that they were talking about, volatility is the game, and everybody is betting on volatility to the extent that volatility bets are causing volatility. So it's feeding on itself, and that's true. But you get the impression reading the article that if you were in there swinging, you'd want to be buying straddles, puts, calls, just anything to take advantage of violent markets, make money when things are really going crazy. But that's as much as telling you that as the game gets more popular, volatility is going to be diminished, simply because when the crowd gets on one side of the bet, the opposite's going to happen, and that's what we're having here. The guys, the big players who initially got the game rolling in January, did so. They bought cheap insurance against the market crash back then, simply because it was cheap, and we were getting the same news. We were reading on page 32 of our local newspapers about some sort of virus going around in China, and they got the same stories, except with a different emphasis. Their briefings were by scouts. They would pay a lot of money to have people feet on the ground, so to speak, in China, reporting back on the ravages of this virus. So those who got briefed on the virus story professionally wound up on the right side of the bet, and the market crashed in March, and it pushed risk premium to enormously fat levels. And so the game at that point had changed. After March 23rd, the winners were on the sell side. They were essentially making books, selling insurance against disaster. But I don't think the Robinhood crowd is quite caught up with that. But anyway, as I said, the predictable result is that volatility is going to be reduced to the extent that everybody thinks they can make easy money just buying straddles.
What do you make of this rush to buy Hertz shares, a company that's filed for bankruptcy protection?
Well, I think it's a healthy sign that wherever that story has been reported in different news outlets, it's been reported as absolute lunacy. It's definitely good for inclusion in the next edition of Extraordinary Popular Delusions and the Madness of Crowds. It's right up there. And Hertz didn't lose any time selling. I think they went to the bond markets to raise a ton of money on the inflated value of their stock, and it's really crazy. It's just it shows you that every obvious story gets bought to death, and when things get cheap enough, you have a play there that says eventually people will be flying and renting cars. I have my doubts about that, really. But if Hertz makes any kind of comeback at all, it's worth more than it was selling for at its pre-bankruptcy lows.
Now, how would that work? Do you think they would raise enough money to prevent them from going bankrupt?
No, I think, and that's, you can say the same about federal stimulus. They can never put enough money out there in the system to stimulate anything. All they're doing is sort of lengthening the time that the various businesses that won't survive are temporarily surviving. So, and that's a problem. You know, we've sort of conflated cash flow with the businesses being viable, profitable. And I think we're right now still supporting a great many businesses that are going to go under. So Hertz is the same way. They're not going to be, their problem is not so much cash flow at this point. It's just trying to make money.
With the Fed supplying so much stimulus, is this going to be money that was wasted? Because so many people are expecting this market to have another major correction or even a crash.
Yeah, the money, I think we talked about this a little bit before. The money is as dead as Kelso's testicles. It's being dispersed into a flatness of money velocity, the tendency of people to take money and say, well, geez, it doesn't matter where I put this, it's just going to grow. Well, we're on the down slope of that, and so money, too much of the stimulus money is getting saved, banked, it's getting paid to keep landlords solvent for an extra month. But I don't think the stimulus is going to have nearly the effect that the planners might have hoped, other than to stimulate asset growth in the stock market.
Is the idea to keep the stock market afloat until at least the election?
I guess. I mean, there's always a political calculation there, and with whatever, 140, 150 days to the election, that consideration is going to rule the markets. Trump is gung-ho stimulus, and for once he's got a Fed chairman that is so completely docile and complicit that we'll have as much stimulus as we can possibly command. But you can see that the arguments are still there, depending on what day of the week. You know, the market's rising, and well, maybe we don't need much stimulus, and that's what happens. The market goes up, and people tend to read that into their economic outlook, but the two have no connection to each other, as most people realize at this point. So I don't know that we're going to get too much more stimulus. It's not even a headline item in the papers anymore about whatever the heck it is that Pelosi and her crowd are cooking up in a way of handouts for everybody.
There was a report that U.S. consumer spending hit a record spike because everybody got their relief checks, but that's certainly something that's not going to last for long, is it?
I don't think so. You know, it's not all relief checks. Partly, we opened things up a little bit, and a lot of people, myself included, we just haven't been spending much money. I haven't been traveling anywhere. I haven't been eating out much. So, you know, I had a chance to take someone to dinner and buy some drinks the other day, and a buddy of mine, and he said, you know, we'll split it. And I said, no, you know, I'd be thrilled to death to get rid of this cash that's just piling up. I like to think that it has a purpose. So what happened was that the certain areas are really flourishing. One, I think the home improvement part of it is going crazy. The grocery business, of course, everybody's buying food that they would ordinarily get at restaurants. We're not eating out, so everybody's buying groceries. So groceries sort of leads the pack on that retail spending. But number two is home improvement. So we've had a big surge there, and even supposedly the auto dealers are seeing a lot of traffic. And at the high end there, people who have accumulated too many bucks are thinking, well, I'll just buy myself a new car. So we've got, I guess, a pretty stimulative, we're in a stimulative phase right now with respect to goodies that we buy ourselves.
Sure, and if you go out to the restaurant, you're probably leaving a really good tip, and I wonder how long that generosity will last.
Yeah, I guess so. You have to show your appreciation, I suppose, for a waiter who's properly masked and pays attention to all the protocols. So, but it'll be a while for the restaurants. I don't know that they're any more geared to operating at half capacity than the airlines. So it's a tough slog. And I can see some restaurants here doing business, but I just wonder how long they can keep going at that level.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Ackerman, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Rick Ackerman. Rick, how's the energy market holding up?
Well, I don't think we're going to get that shot in the arm that pushes the price of a barrel of oil above $40 a share, where some of the producers actually start making money. When I'm out there on I-95 here in South Florida, it looks, the traffic almost seems normal. There's a lot of traffic on the highway there, and even on the local roads I'm seeing it, and I don't know where everybody is coming and going. Maybe like me, sometimes they're just kind of driving around to see what's out there. There's automobile traffic. Air traffic is going to be very much reduced for a long time, and I'm not quite sure how it works in the cities with respect to energy consumption on public transit, but we're going to have to cut back on capacity there. So it's really hard to see anything bullish for the energy sector right now.
The trend where all these people were sent home, are a lot of companies telling people you don't have to come back to the office, we're happy with you working at home? Yeah,
and you can see how that plays out as a cost-saving measure that's going to reduce the need for office space and all that. But you're going to have consultants, experts coming from the other side of the story and talking up the benefits that you get from people interacting in an office. And I have to say I'm not completely persuaded that people have to come back to the office, but that goes more to the basic question of what the hell do we produce? Sometimes you wonder whether America's prosperity is based on everybody doing each other's nails and shining each other's shoes, so to speak, and you just wonder, well, what do we really produce, other than digital frauds like Google, Facebook? They're just glorified advertising agencies, and that's another crazy thing, that we've got 5 stocks essentially carrying the whole planet right now, as though Microsoft, Google, Amazon, as though with those stocks moving higher, everything's going to turn out all right. But I was only recently aware that Google has 70% of all the advertising revenues online. So you've got such a concentration there that the prosperity is not exactly spread across the land as far as Google's good fortunes.
Also, if people can work from home and don't have to go into an office, I wonder, will companies start thinking, well, why do I have to hire locals in this particular country? Why don't I just hire somebody in the Philippines to do the same job and pay them a lot less? Well,
because I think that you've got a more fluid labor market here that can, I think the employers here can get a pretty good value shopping talent here. It's really hard to predict whether everybody's going to be working at home, and as to outsourcing, I don't see it as a big game for outsourcing, although I'm hard pressed to give you some concrete reasons for that. But we'll see how it shakes out. Whenever I call for tech support anywhere, I certainly don't get a U.S. number.
Now, are we going to see new businesses develop? And I'm thinking about all those people who really look forward to lunch, getting something new or different to eat. If you work at home, you tend to have like the same thing for lunch every day or pretty close to the same. Will we see catering services go out to the suburbs where the people are and start serving them lunches there, and maybe beer trucks and deliver a cold beer to somebody? Just have somebody serve you on your front lawn or something. Because in British Columbia right now, you can order takeout alcohol when you have a takeout meal.
I think that's absolutely going to happen. So if you like to be in the restaurant business, get yourself a food truck and go out there with empanadas or whatever you're going to sell, spaghetti and meatballs. I think it will be a great business.
We'll have more with Rick Ackerman right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Rick Ackerman. Rick, what's happening with gold? Is it stalled right now?
Well, same thing. The last few times we've talked, I've wanted to emphasize that gold is not in a bull market. It's in a bullish market. And I hate the stuff. I track it, and the swings are, for trading purposes, are relatively predictable. But to put it in a bullish frame of reference, gold and silver, do not like to compete for attention with the stock market. So when the stock market is rising strongly, as it has since late March, there's just no real institutional interest in gold, regardless of what it is at the grassroots level. So, but that said, gold's done a pretty good job. You have to notice that even with nobody paying attention to gold, nobody really wanting it except the hardcore gold bugs, it's been going upward. Not in the way that bull markets do, meaning relentlessly, but it ratchets up and then it sort of hangs out, consolidates for a month or 2 months or 3 months or however long, and it could certainly test your patience. So I think if gold is acting this well in such a negative environment, that it's a very positive sign for somewhere down the road when all the buying of stocks gets switched off. And incidentally, as far as when the buying gets switched off and when the Dow finally heads below 10,000, which is where I think it's going, I think I've got a good idea as to what's going to cause that. It's not going to be a shock and it's not going to be an epiphany, but it's going to be the slow realization that Trump could lose the 2020 election. And I think that the first shot fired in that reign of, I'm hard pressed to characterize it, but I think it'll be a Biden choice of Susan Rice as his running mate. So there you have all the aspirations of the protesters leapfrogging instantly to the fact of we're finally going to have not only a woman president, but a black woman. So, and whatever Susan Rice's weaknesses and problems from the past, they'll be invisible because every news outlet other than Fox they won't even mention it. There are no negatives for Biden and his running mate. So I think though when if Biden picks Susan Rice as his running mate, it's going to take, 3 days, 7 days, 2 weeks for this idea to dawn on investors that Biden could actually win. And of course, it's not Biden that's really running. It's a black woman at that point because we know Biden he's lost his marbles. So, So when that slowly starts to insinuate itself on the tiny brains of investors, it's gonna take a toll. And I really think the Dow could trade maybe even under 3,000 ultimately, just to put a number out there. But it's going to begin really with the dawning realization that Trump does not have a lock on the White House.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim. Really enjoyed chatting with you as well, and look forward to our next conversation.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.